Thank you and welcome back to Markets Today. I am joined by Abraham Muthogo, who is an analyst, to help us make sense of the currency and, of course, by large, the economy. But let's start from the market. What do you make of the market performance? Are we now going to the green side of things?
I think so far so good. There's optimism in the air that maybe Omicron was not as strong as it was said to be. You can see the UK has relaxed, it's starting to relax. So, but at the same time, one person is relaxing, the other person is tightening.
Yeah.
So there's still a lot of mixed signals. But I think so far the optimism seems to be building, and I'm happy that also Kenya as a country, I think we are not drastic in terms of any measures, in terms of losing our gains that we had made in terms of opening up our economy.
Yeah.
Despite the numbers shot at one point up to 40%. So I think with that optimism, I think so far the indication is that this will be a good year.
There was a 6.6% dip in Q4 at the market. I mean, investors lost 6.6% in Q4 alone. That is according to the report I've seen. Does that give you some jitters?
You see again, this economy, as much as there's data on it, there's a big segment of this economy that's not driven by data. No, not that the data is not there, but we are not aware of it, in the sense that they're below radar. So there are a lot of fundamentals that a metric will say one thing, the ground will say a different thing. And I think even without going further, the inflation number
matters.
Because if you look at worldwide right now, most countries are seeing inflationary numbers they saw 30 years ago. So how can it be that ours has remained within our bands?
Maybe we are smarter than the British. But just to close on the market performance, where would you invest if you went into the market today? Do you have some counters that catch your eye?
You see, right now, our counters are not many. So, I mean, if you remove the banks and the telecom, basically you're left now with the rest. Yeah, but now the banks so far are doing very well. The telecom, of course, the telecom in Safaricom is doing very well. I think now you can put your money there, because the outlook even for banks, it looks like it will be a good year, because they are so I would put my money there if at all you're restricting me to the capital markets. But if you allowed me, then I would still put some money in government paper, because the returns are very good, especially on the long term one. On the bonds, the returns on the bonds is quite impressive, and most of these are coming with tax breaks. So I think if you're a long-term investor, I think the bonds would be a good investment home.
Okay. Fair enough. Let's go to currency. There has been a downward trend. It's the fall and fall of the Kenyan shilling. What's happening?
I think this one is purely a question of supply and demand. I think, number one, because of COVID, we were not exporting as much as we did. That's on the one side. On the second side, we imported things that we normally don't import. So we imported a lot. Things like PPEs, masks, the whole works to do with survival of this pandemic. That component and related services, medicines, vaccines. You see, so there's a whole shebang of things that we're importing. Not to mention that because of the localized mix-up in the economy, things that were being sourced locally are being imported. So there's a shift, there's a higher demand for import. So those two, exporting less, importing more, means you widen your deficit. So given that, we import in dollars, so if you're importing in dollars, then that means that the demand for dollar has really gone up. And if there are less dollars coming in, then naturally it will follow. I mean, there have been discussions of where we are now at 113, 114 space. And it looks, the pressure is still there. I think CBK is doing all they can. But is it for how long?
I hear you. There are claims that the dollar is also comparatively stronger than the Kenyan shilling.
You see, the dollar is almighty in the financial sector. Why? Because it is universally accepted. So, no matter how many of them they print, you will accept it. And that's the way it works at the moment. So the thing is, yes, they're saying it's stronger, but I think it's because we want more of it than we normally have because of our current situation we're in.
Yeah.
That we need more of it to buy, because most of the places when you go, you have to show them the greenback. Otherwise they'll not give you whatever you want. So the demand for that has gone up. See, they have that luxury, and don't forget, you can never underestimate the effect of imported inflation. And don't forget that when there was stimulus package in the US, 1.4 trillion, most of that money was just printed. You see, so that inflation has to go somewhere. Some of it stays in America, some of it comes here and elsewhere. So when you look at the matrix of inflation, interest rates, exchange rates, those are related matrix. Yes, maybe not for discussion here, but those things are related. And even when you're coming up with a monetary policy or forex policy of how to keep the dollar maybe at 110 or whatever you want to keep it at, those two factors have to be looked at.
Yeah.
Our rate of interest here and our rate of inflation.
Look, I agree with you that there was, of course, the export factors and the import factors. But two things. One, globally, these currencies are also struggling. I mean, because there's a lot of inflation in the UK right now.
Everywhere.
There's a lot of inflation in the US, and I think it's the after effect of the stimulus packages that were released after COVID. So there's too much liquidity.
Yes.
And so some of these, currencies are not as strong. But on the other hand also, we are not the only ones who are importing, and we are not the only ones who are exporting. Why is it that globally, the Kenyan shilling is, quote unquote, the worst performing currencies in the last 6 to 7 weeks?
You see, I mean, the strength or the weaknesses of a currency has to do with what you can do with it. I mean, our local currency, with due respect, apart from maybe from the East African community, you cannot do much with it. Either you use it here, maybe a bit of it in Uganda, a bit of Tanzania, maybe a bit of Rwanda, and you're done. Dollar, we want it because of what it can do.
Yeah.
Even there are places where you go with a sterling and they will not give you what you want. But the dollar, you'll hardly ever somebody sending you away. So the strength or weakness of it, and again, and that has a multiple effect, because as much as we don't use much of a pound, it still compares better to Kenya, to the shilling. Because there are still places where you can go with the sterling, where if you want to buy things in the UK, they probably insist on their sterling. Then if you go to Europe, they'll insist on their euro.
Yeah.
So those three currencies will definitely be, I'm sure we've lost ground on all of them. But if you look at cross-border, if you look at shilling versus our neighbors, I'm sure the story is different. It's probably the inverse. Because here now, if you're in Tanzania, you can use a Kenyan shilling. But in Kenya, you would not accept me to buy you coffee in Tanzania shilling. Even no restaurant will accept it. So again, it has to boil down to what can you do with that shilling and the rate of its acceptability, both geographically.
Yes.
Yeah.
The oil prices are going up day after day after day.
Yeah.
Does this have an inclination in our currency?
It does, because for the same volume, you pay more. That is the simple effect of it. But now look at the effect of it on inflation. Right now, we are paying oil marketers. Okay, personally, it's a strategy I really don't agree with. We are paying oil marketers not to charge us more.
Yeah.
But that money has come from who? It's tax money. So it's really, it's self-defeatist. That strategy is self-defeatist in the long run.
Yeah.
Because for them to continue paying, they must tax somebody else.
Absolutely.
So basically we are keeping the oil prices low, but artificially. So for how long can we do that? But we are doing that to try and save the inflationary figure, because if this price kicks in properly, it will push the rate of inflation beyond 7.5, which has been our safe band of the upper band, because we've never had a problem with the lower band of 7.5. Because when it crossed there, now we have to review the entire monetary policy. And I don't think anybody is ready for that now. Yeah. But the truth of the matter is, if we allowed the price of oil to come the way it is, and put the formula that the EPA has been putting all those years, I mean, it will push everything up. Even now, Unga was doing 99 shillings, now it's 160. So that is the one for chapati. So just that, if you look at just that,
It should tell a story.
Yeah, it should tell a story. So in terms of what I'm trying to say is, some of the numbers we have are probably being subsidies are distorting. Subsidies by nature are distortive.
Yeah.
Yeah, and they are never supposed to be a long-term strategy. It's supposed to be a first aid, and then you do the real thing.
Yeah, but now perhaps this might be a bit off the cuff.
Yes.
What's driving the oil prices upwards globally?
I think OPEC is just doing its thing, because clearly there's a lot of oil in the world, but unfortunately it is in those countries, so they do what they like with it.
They are trying to recover.
Yeah, so and those guys, and they are the only official cartel in the world because they meet and agree on a price and on a volume, and there's nothing you can do about it because they own the resource. So those guys are the guys who are pushing that price up, because there's no other explanation. Because there's the capacity to drill more oil and to bring it to the surface is there. Are there volumes for them to meet the demand? It's there. But then again, with fossil fuel, you can see, with the advent of electronic cars,
yeah,
it's just a matter of, that's probably they want to make the money now because they are now time bound.
Okay.
Yeah.
I have a feeling, and perhaps time will tell, I have a feeling, I think our biggest problem with the currency is this oil thing.
It's possible.
Because it's the one driving the inflation.
It is the biggest. Yes.
Yeah.
It is the biggest, but you see, a lot of our inflation here in this country is imported, because it has to do, again, you rightly say, the oil, and comes also many other ships of all these commodities we are bringing in.
Yeah.
Everything is so the combined effect of that now just drives the cost of production up. And you can see traders, Kenya being a very elastic market, they easily pass it on.
Yeah.
Yes.
All right, let's hope for the best. Time to take a break. When we come back, we will make sense of the meeting by the Monetary Policy Committee next week. Abraham has already mentioned about the monetary policy and whether we should think about it or not.